Welcome to TakePropips, your ultimate guide to navigating the Forex market. Today, we're diving into one of the most fundamental aspects of successful trading: the best technical analysis methods for beginner Forex traders. If you're just starting out in Forex, this video is your blueprint to understanding and applying key technical tools. And along the way, we'll touch on how tools like the Trading Management Solutions EA can elevate your trading game. When stepping into the world of Forex, one of the first things you'll hear about is technical analysis. But what exactly is it? In simple terms, technical analysis involves analyzing price charts and patterns to predict future market movements. Unlike fundamental analysis, which focuses on economic data and news, technical analysis is all about interpreting what the market has already done. Let's kick things off with a tool that every beginner needs to master: support and resistance levels. These are key price points where the market tends to reverse or stall. Think of support as the market's floor and resistance as the ceiling. For example, if the Euro-USD pair keeps bouncing back from a certain price, that's likely a strong support level. Identifying these zones can help you decide when to enter or exit a trade. Next, let's talk about moving averages, another essential tool for beginners. Moving averages help smooth out price action and highlight the overall trend. The most commonly used ones are the simple moving average, SMA, and the exponential moving average, EMA. For instance, when the price crosses above the 50-period moving average, it could signal a bullish trend. As a beginner, sticking to these simple indicators can save you from information overload. Another key concept in technical analysis is candlestick patterns. These patterns tell a story about market sentiment. Let's take the bullish engulfing pattern, for instance. It signals that buyers are taking control, and it often leads to an upward price move. Mastering these visual cues can help you anticipate price direction with better confidence. Now, what about identifying when the market is overbought or oversold? That's where oscillators like the Relative Strength Index, RSI, come into play. The RSI ranges from 0 to 100, and levels above 70 indicate overbought conditions, while levels below 30 suggest oversold conditions. It's a great tool to pair with other indicators for a more comprehensive analysis. At this point, you might wonder, how do you bring all these elements together? This is where a trading solution like TakePropips Trading Management Solutions EA comes into play. With features like a technical analysis dashboard, automated support and resistance levels, and even candlestick pattern recognition, the EA simplifies these processes. It's like having a trading coach guiding you through each step. Speaking of automation, trend indicators like the ADX, Average Directional Index, can help you understand whether a market is trending or ranging. Beginners often make the mistake of using trend strategies in a sideways market. With tools like TakePropips Trend Scanner, you can identify the strength and direction of trends across multiple timeframes, making your analysis more precise. Another invaluable tool is Fibonacci retracements. These are used to identify potential reversal levels based on the golden ratio, a mathematical principle found in nature. By drawing Fibonacci levels between a high and a low, you can spot price levels where the market is likely to react. This technique pairs well with other indicators to confirm your analysis. If you're still feeling overwhelmed by all the charts and data, don't worry. Platforms like TakePropips also offer a currency strength meter, which shows the strongest and weakest currencies at any given time. This can help you make more informed decisions, especially if you're trading currency pairs like GBP, USD or EUR, JPY. Let's not forget about risk management. One common mistake beginners make is focusing too much on entries and not enough on exits. Tools like trailing stops and break-even management, available in the Trading Management Solutions EA, can help you lock in profits and minimize losses. Risk management isn't just a backup plan, it's a core part of successful trading. Finally, remember that trading is a journey, not a sprint. As you practice these methods, keep refining your skills. Start with a demo account to apply what you've learned without risking real money. The TakePropips Trading Management Solutions EA even allows you to test strategies in a simulated environment, so you can find what works best for you. In conclusion, mastering technical analysis as a beginner doesn't have to be complicated. Start with the basics: support and resistance levels, moving averages, and oscillators. Gradually incorporate more advanced tools like Fibonacci retracements and trend indicators. And most importantly, take advantage of modern solutions like the TakePropips Trading Management Solutions EA to streamline your trading. Thanks for watching this video on TakePropips. If you found this guide helpful, hit the like button, subscribe to the channel, and turn on notifications for more trading tips and strategies. Let us know in the comments which technical analysis method you're excited to try, or if you have any questions. And don't forget to visit TakePropips.com to explore tools that can transform your trading journey. Happy trading!